Michael, over to you. Looking for value in this sector. I tell people over everything every single time, but that's also the ace up my sleeve. I run a conference business. I host a podcast. I talk to people all day, every day. So that's what I do. And I can play that game better than most, right? If I was a geologist, I'd probably play the game differently, but I'm not. So what would you share with this audience in terms of key, most important indicators that drive share price performance? Is it the people? Is it the asset? Is it the jurisdiction? What stands out in your mind?
Unfortunately, a lot of times it's luck.
I love that.
But you have to work hard to get lucky, and that's the key. You have to, for us, and I run a group in addition to Visa Silver. Most of my time, 95% of my time is on Visa Silver, but we have a group called Inventa Capital, and the hardest thing for us is not to find assets, it's not to find shells, it's not to find opportunities, it's to find someone that can back the business and put their own money in and really want to be a part of a business and grow a business. And I think it's actually almost case by case when you have to meet these people, and that's why this conference is so important, right? To come to a booth, say hi to a CEO. Each of us, we've been at our booths and talking to investors, and I think that's actually a really important part of this business. It's a people business. Half of us in the room probably don't understand the 43 101s and the technical information. But you get a sense of, does the CEO believe in this? Are they buying with their own money? And I think that's so important, to get a chance to meet these people.
Can I just add to that? Driving share price performance, absolutely the people. Obviously, comes down to the asset in the ground as well, but also timing. Right? If your macro narrative blends with the product that you're delivering, whether it be an exploration success, whether it be a delineation and potentially a takeout, and whether it be a producing opportunity, producing uranium, lithium, gold, if the macro narrative globally is going in your favor, you're going to have huge share price performance versus others in a different commodity, right? So timing, I think, is really critical in looking at when to invest in certain things, and that's not easy. But quality professionals like Cam, with the experience, knows to look at and how and when because of how much attention we pay on the macro in this global world.
I love that. And by the way, I think calling out luck as a key indicator is it's awesome and absolutely true. It's also true that the harder you work, the luckier you get. And that's another argument I would claim why the people are the most important factor, because you want the durable entrepreneur who's okay getting knocked down and they have a plan C, right? Because plan A and B probably aren't going to work. That's just the nature of an early stage business. Bezos calls this at-bats, right? It's not about trying to hit home runs. It's about trying to get to the plate. And the home runs just happen. And they happen more frequently the more times you get to the bat, right? So I love the take, man, and I think it's a humble approach and a very accurate one. And it's largely how this industry works. I mean, we're looking for minerals under the surface. It's a treasure hunt.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Cam, same question over to you. I know you have a lot more in terms of your operation and how you analyze companies. You go a lot deeper in your diligence than most because you can and you have to, right? You're not just investing your own cash. You got a whole a client book. You're the stewards of their capital. But first, okay, so am I on the money with people over everything every single time? And then what's next? Or how do you, in terms of that value ladder, where do you start, most important, and where do you go from there?
Well, I guess a good example are these three companies on stage. Each one of them I own differently for the unique characteristics. In the case of Vizsla Silver, as I mentioned, I didn't get involved until 6 months into it. Then I realized the Napoleon discovery was something very meaningful. So I think first time I called Mike up, I think I met with Mike and Craig 3 times in a week. I just could sense that these guys were onto something big. And so fast forward, these guys went into a district which had 122 drill holes historically and had been mined for decades. And they made this discovery, blind discovery. So fast forward to today, in 3 years, their new last resource, 330 million ounces of silver. And they've only looked at 10% of the district. And so the scalability of other discoveries and probabilities are extremely high. So when you have a situation that already has a very solid asset base as it sits right now, with significant exploration upside, and to mirror the fact it's also 1 hour from Mazatlan, and it's right beside the highway, which makes it nice for having a margarita. It's a great property tour. But no, the delivery of what they've executed on. In the case of Paddy, sure we have a history with numerous companies in the past, but his execution of on time, on budget, one of the lower quartile cost miners in the business, but huge growth. And that's the significance. And Paddy, as he said, has put a lot of money into the company himself over a number of years and continues to do so. But he has a growth platform. Some assets out there have 3 to 4 years to permit. So it's kind of a dead money zone from my perspective, because they have to go through all the permitting and 43-101, all this studies, First Nation relations, government relations. So those projects could be great projects, but their timeline of performance may be limited because they have to raise capital through this whole process. With the case of these two companies, they're on a trajectory of growth. They're well capitalized. In the case of Paddy, they've got the bank financing for the expansion, and they're going to build a mid-tier. In the case of Orion's project, another example, I saw a management team go into a country where the assets were producing 80,000 ounces, and I looked at that and went, okay, there's huge growth prospect. And that message came very clear from Darren Hall, who's the CEO that Ryan was referring to. And in 3 years, they went from a $50 million debt position and 80,000 ounce production to a 285,000 ounce producer with 110 million US in the bank. And so that's a very successful growth platform. And now they're making this acquisition on Marathon, which I'm also a very big investor in, and had something to do with this relationship. Now they're going to grow it to 500,000 ounces. And so they have a lot of levers to execute value and growth. And so all three of these companies fit that criteria for different reasons. And I'm going to say one other thing. We lost 3 great analysts at Canaccord over the last 4 years. Each one of them went to one of these companies. Michael Pettengale went to Vizsla because he saw the opportunity. Kevin McKenzie went to Orezon because he saw the growth prospects. And then Tom Gallo went to Caliber because he saw what management was doing, what the growth was. So when your analyst leaves you and goes to work with these companies, these are other telltale examples of maybe you should pay attention.